Hello traders and welcome to our first OBR investing market forecast of this upcoming week. In this video, we are doing the week of November 29th, and how we're going to structure these videos is a little bit of an overview of our fundamental drivers that we have to be aware of, such as, earnings, and also what are the main news events that will be going on, including interest rate decisions, monetary policy, things like that. But we're also going to be diving into our technical analysis into the second half of this video, and there is where we're going to cover our plays that we're looking at in this upcoming week, just any higher time frame things. Obviously, we can't call out our intraday calls on this, but we're going to be highlighting some of our favorite longer term plays. That being said, without any further delay, let us get right into this week's video. So here we are looking at just some of our fundamental drivers in this upcoming week. As you can see, Monday we are starting off 3:05 p.m. when Fed Chair Powell speaks, and then Tuesday 10 a.m. when Fed Chair Powell testifies. Wednesday, we have 8:15 news for non-farm employment change, and 10 a.m. we have ISM manufacturing numbers. That'll be very, very interesting to see that industry's manufacturing PMI for this time period. Thursday, we have OPEC meetings all day, which could influence the price of oil, obviously. And then Friday, we have NFP, as this is the first week of the month. And NFP is our non-farm employment change, as well as average hourly earnings. And these are going to come out at 8:30, as well as our unemployment rate. And then 10 a.m., we have ISM services PMI. So, welcome to the technical analysis portion of this video. And as you can see, we're going to start off on Bitcoin. So for Bitcoin, we obviously had a little bit of a decline in the past couple of days and weeks. That being said, this is absolutely not abnormal, and this is something that we should be expecting and also be happy to see, especially in a bullish market, which we are still in a bull market. Why is this? Because we always know that corrections of healthy trends are normal. Corrections are very, very healthy in sustained trends, right? So a tool that we like to use at OBR, a lot of the analysts like Fibonacci retracements, and as you can see here, we are looking at the 38.2 to the 61.8 Fibonacci retracement of this wave right here. This is the first wave of wave 3. And that is another principle that we utilize a lot in OBR, which is Elliott wave principle, especially on our higher time frames. Not all of our analysts use this, just more of our long-term analysts like myself and Aliknak. Obviously, Bull and Andy are going to be putting out a little bit more faster plays rather than using Elliott wave theory. That being said, we use this and we find it very, very, very helpful on longer term positions because you're able to read and identify market context a little bit more. So this is totally normal. We're expecting a retracement which could happen all the way down to 49K. That's totally fine and totally expected. So there's no reason to really be upset about that. But obviously, we are going to maintain an overall bullish bias on BTC. As I said, we are still in the bull market. My next take profit on BTC is 73,000. Ethereum is a very, very similar chart. And on Ethereum right now, we have recently broken through a very, very important resistance level, which obviously previously acted as our all-time highs. What happens when we break out of resistance is we can break through that level and come back and test it. And because it was acting as resistance before, there still might be supply and demand imbalances in that area, and it will therefore act as support rather than resistance as it is now on the bottom. Remember, resistance on the top, support on the bottom. So we broke through this at this level right here in October, and then now we have obviously come back down and tested this level and are now finding it as support. That being said, my bias is bullish as well on Ethereum, obviously, because Bitcoin is going to drive the market, and I think Ethereum will appreciate as well as Bitcoin. That being said, my first take profit on Ethereum is 62.30. So here we are looking at Uber. Uber is in a very interesting position because we are now retesting a previously touched and confirmed Fibonacci cluster. And a Fibonacci cluster is exactly what it sounds like. It is a group of Fibonacci numbers taken as a group, as an aggregate, and then we can draw a zone around those levels. We can possibly do a video on how to do Fib clustering in a future video. That being said, we found a very, very important low and support at this level, and are now able to find some support there and looking to bounce off of that. That being said, we're long on Uber and we had thoughts of Uber appreciating, but obviously we've rejected completely through this support level right here. And we may come back up and actually test this as resistance and maybe consolidate for a little bit before finding our next direction of price. Here is Facebook, and I wanted to quickly touch on this because I think this is very important. There's two counts on Facebook. The first count says that we are due for another wave to the downside, which we can use and find a expected price target for that level using Fibonacci extensions. So perhaps we can see that this next wave comes down to this level, acting as the 127.2 Fibonacci extension of wave A. But that being said, this is just one potential area where we can find a low and then continue moving higher. That is the black arrow that you can see here. And then the other possibility is the red arrow. The red arrow suggests we are done correcting and we are now obviously set in for our next impulse wave, which could take us higher to the 503 area. That being said, my first take profit before that is at 412, and I personally think from what I can see here that Facebook is going to come lower, complete a wave C, and then head higher. So my bias is going to be bearish in the short term. But if we invalidate this level, the top of this purple box is the 61.8 Fibonacci retracement of this last wave. If we break through there, then I think it's more probable that we continue moving higher rather than lower. So here's a chart on SPY using a new trend line technique that I'm learning. I'll let you guys know how it works out for me. It's not something I'm used to, but it has worked out pretty well in SPY. And recently, obviously on Friday, we had a little bit of a dip around 3.5% away from our all-time high now on SPY. And as you can see, this is something we anticipated. We knew that this was going to happen. We've been talking about a correction in SPY for a while in OBR because corrections are healthy in sustained trends. So we have once again drawn our 38.2 to the 61.8 Fibonacci retracement of wave 3, this wave right here. And we are now, just now, testing the 38.2 level of this wave 3, which means that this is an area of probability where we can reverse and head higher. But obviously, like I said, we can continue moving down anywhere in this box. We're going to go onto a lower time frame and try to find entries higher. I know some of our longer-term spreads analysts, such as CLAYTON, are already starting to leg into positions, as well as myself on the 10K account challenge. And you can start to do this incrementally based on percentage drops from all-time high, or you can do this based on a technical entry that you find on a higher time frame or lower time frame, whatever really suits your needs and your trading personality. That being said, my bias is bullish on SPY with a short-term retracement. So here's my Cardano chart. And on Cardano, we obviously completed an ABC correction and are now finding support around the 127.2 extension zone. So from this area, we're going to expect prices to start appreciating, hopefully on Cardano, as well as obviously Bitcoin and Ethereum. Wherever those two move, really, Cardano is going to follow in its footsteps. But here's technical reasons to prove our validity of a bullish bias on Bitcoin and Ethereum. And here is Oatly. Oatly is our long-term position, which we were taking on the 10K account challenge. We are currently still in this position. And you may be asking, why are we in this position? Well, this is based on unusual option flow, which we will not get into in this video, but also Fibonacci levels. So obviously we can count two waves, two 5-wave declines here. I just labeled it ABC because that a zigzag is a 5-3-5 pattern, so it helps me remember it a little bit easier. But as you can see, we have A, B, C right there. If we were going to zoom in, you'd be able to see it a little bit better. But that being said, we have waves 1, 2, 3, 4, 5 with an extended wave 5. So there's two 5-wave moves down, and now you are expecting a retracement. And what we can do to measure where this lower wave might end is our Fibonacci retracements, right? We talked about this just prior. So what we were identifying is by using two Fibonacci tools, not just one Fibonacci tool, but two Fibonacci tools. We have a zone right here, and right around that level is where we found some consolidation. So combining our technical analysis with unusual option flow has provided us a very, very high win rate, and that is why we are bullish on Oatly. And I'm going to maintain this position all the way out until March is the expiration. Here's a Netflix chart, and if you were not in OBR, you may not have noticed, but we actually called the very, very top. Multiple analysts called this level on Netflix, and obviously that worked as resistance very, very nicely, and a lot of our traders were able to make a lot of money on Netflix. That being said, we came a little bit lower and broke out of this channel that we formed, but we just recently broke back up when we gapped on Friday and just closed back in this zone. So we need to see really what happens on Monday, but if we keep on closing below this line, my bias is going to maintain bearish on Netflix. Going on our last crypto chart of this week, we identified a triangle pattern in the Ethereum to Bitcoin chart on TradingView. So this Ethereum to Bitcoin chart is just weighting the price of Ethereum in comparison to the price of Bitcoin. And as you can see right now, it's around 7.4% the total price of Bitcoin. And you can totally chart this, and the charting works. It's very, very interesting and actually super fascinating that it does work, but it's a very, very good indicator, a leading indicator, if you will, on the price of Ethereum in relation to Bitcoin. So what we can do from here is we identified a Elliott wave triangle completion, and my bias is going to be bullish on Ethereum BTC, meaning the price of Ethereum will appreciate in relation to Bitcoin, which will be very, very good for altcoins should we see this play out. So here we are watching Tesla very, very closely, and I just wanted to point this out. If you were in OBR, actually, you caught this high that we called out right here, called out this retracement, and I now think that we are going to come lower on Tesla. I'm very, very confident that we will see lower prices, and I'm counting out the subdivisions of every single wave here so I can make sure I'm following the rules so I can give you guys an accurate description of where I really think prices will go. That being said, in another video, we'll maybe highlight types of corrective patterns. A type of corrective pattern is a zigzag corrective pattern. In a zigzag, we have a 5-3-5 pattern. In a 5-3-5 pattern, we have 5 waves in wave 1, as you can see in the red, 5 waves in wave 1. 3 waves in wave B, as you can see, 1, 2, 3, labeled in the black right here. These are the 3 waves in wave B. And then wave C, we have a 5-wave move as well, just the same as wave A. So as you can see, I'm trying to count these waves out now, and that is my reason for why we are going to head lower on Tesla. And my first price target that I'm looking for on Tesla is $900.68. But as you can see, we've been finding a lot of resistance at this Fibonacci cluster up here that I've highlighted, and I think that we will continue to find resistance around there until we can get this healthy retracement before we continue moving higher. On Apple, we identified a 5-wave corrective move using the same thing we've talked about many, many times in this video, the 38.2 to the 61.8 Fibonacci retracement. As you can see here, wave 1, wave 2, wave 3, wave 4, wave 5. This is a very, very textbook LE wave pattern, and this is something that we are partially going to be playing in OBR, and I think will be a fantastic, fantastic trade. So my bias is bullish on Apple. So for our last chart, and the chart of the week perhaps because it's such an interesting chart, is Meta. This is a metaverse-related ETF. And as you can see here, what am I going to say? Textbook LE wave pattern. We're just waiting for a retracement here before we scale into leaps in OBR. Some of the analysts might be playing this intraday, but I know me and Clayton are looking to take leaps on this, and they are going to be in the 10K account challenge as well. If you're not familiar with that, be sure to watch our other video because that's going to be highlighting our recaps for it. And also we have the rules displayed in our Discord if you want to attend and really partake in that. That being said, this was our last chart for the week. My bias is bullish on the Metaverse ETF. So thank you so much for tuning into OBR's first market forecast for this upcoming week. I really hope you guys took a little bit of value out of this video and are able to go into this upcoming week with a little bit more clarity into the market and some things that you can look into, maybe that you want to take a play on. So, as always, happy trading from everybody at OBR, and we'll see you in the markets this week.